And welcome, it's Mary Ellen McGonagle with your Friday afternoon weekly Edge show for March 15th. Let's take a look at today's agenda. Very familiar for those of you that watch my show weekly. We are going to take a look at those broader markets and beyond, look beneath the surface, take a look at some of the sector rotation that's continuing to shape up, and then some of the news that drove price action last week. And then last up, viewer question of the week, and it's all about why are energy stocks on the move higher. We'll get into that as well as a couple of stocks that are looking quite compelling in the energy space. So some of the news last week, we did get key inflation data, and that would be Consumer Price Index, CPI data, came out on Wednesday. It showed that inflation is continuing or certainly possibly moving higher. And interestingly, the markets shrugged that off until we got news on Thursday. Another inflation data point, core PPI, Producer Price Index, also showed that inflation is not slowing. We did then see a response, a pullback that took place. Also last week, we did see in response to the inflation data, interest rates trended higher. I'll share with you which areas were and will continue to be most impacted from those rising rates. And then also earnings reports continued to drive the markets. Oracle earnings on Tuesday gave a big boost to AI-related stocks. However, earnings report today, Friday, from Adobe pushed many of those stocks lower. So still a volatile area. This is what I talk about in my MEM Edge twice weekly report. The fact that investors are still vetting out who the winners and those that will not participate in the monetization of AI are going to be. So we're going to continue to see this type of volatility. We also saw retail sales post their largest increase since September. We saw a nice increase in some of these retailers that came out with strong numbers. And then next week, you'll want to be aware the Federal Reserve will make their next interest rate decision. And most important will be that press conference that Fed Chair Powell will go ahead and conduct on Wednesday. So let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. And this broader market index closed flat for the week. We can see that we closed below this key 10-day simple moving average, but we did find support at this purple 21-day simple moving average with the RSI, that relative strength indicator, and MACD in positive territory. The near-term uptrend in the S&P remains in place. The Nasdaq pulled back a bit more this week, and we did in fact close below that 21-day simple moving average. Not what we want to see. The RSI is still a positive, but certainly trending. And if we get a break below that 50 with the RSI, we could see further downside depending on where the index closes for the week. MACD still up here in positive territory, another momentum indicator. Mixed signals, but certainly you will want to be on your toes as we head into next week. Beyond the broader markets, we're going to take a look at those 11 underlying sectors. This is a 2-month daily price chart view, and I've added a relative strength indicator, sorted these sectors descending, and let's take a look. Continued strength in the energy sector, XLE. And this particular move this week has everything to do with news that there is more demand for oil than supply. So I'll take you from here and we'll look at the price of oil. But also impactful was Ukraine's bombing of some refineries in Russia, and that also pushed the price of oil up, and then hence many of these energy names on the rise as well. Moving through, we can take a look up here at the forefront, mostly cyclical areas, but down here you also want to be aware of areas that are exhibiting relative weakness, and certainly technology would qualify. The group was down last week more than the broader markets. We can see right now we're finding support at that 50-day simple moving average. But take a look, the RSI now in negative territory with this below that net neutral 50, and then also that MACD trending lower as well. Not good news for technology. So also another area that you want to be aware of that is losing a bit of its uptrend, and that is healthcare. Nice, healthy uptrend from November into the end of February. More recently, a bit of waffling here, and then a break below the 10 and 21 with that RSI poised to trend lower. Many of the bigger winning names are certainly due a pullback, but it is of note that healthcare is potentially in the beginning stages of that. So from here, we're going to take a look beyond these sectors at some of the underlying areas within these sectors. And again, 2-month daily price chart view with that RSI. I'm going to go ahead and update. And up here at the forefront, home builders, and we can see they're holding in really remarkably well. And I'm saying that because interest rates, as I mentioned, are on the rise, and generally they do negatively impact home builders, but there are some growers in there coming out with some good numbers. We're going to get some home building related data as well. By the way, the economic calendar next week also. Let's take a look at the yield on the 10-year. Here's that uptick in rates, and we are now at 4.3%. That 4% is a bit of a threshold area. Anything above that is viewed as elevated, and certainly this week's move higher has had a negative impact on certain areas. Most notably is going to be software stocks, and this is IGV, the software ETF. We're also seeing a decline. I talked about Adobe coming in with negative numbers. That stock plunged, and it took with it other AI-related software stocks down lower as well. Other growth areas that are waffling at the very least here would be semiconductors, down 4% for the week. And we can see we're on the cusp of a negative momentum move with that RSI. We have had that MACD crossover, indicating at the very least that this strong uptrend has, for the near term, decelerated. So we've broken below that 21-day simple moving average, another key area of technology that's pushing that area lower. We talked about healthcare on the move as far as potentially pulling back, and 2 areas of note here is the medical devices ETF, IHI, and you can see that we have pulled back this week right to that 50-day, but we now have a negative near-term momentum with that RSI. And then also we'll take a look at biotech stocks, also on the move lower with yesterday's sharp decline, pushing the group down. And this particular area is renowned for being a place that does well in a risk-on environment, because most of these companies are not yet reporting earnings. When we see this deterioration, it's a signal that the risk appetite among investors is declining. One other area that pulled back a bit last week, small cap names, and this is another riskier area because these smaller companies are going to be more volatile. We can see this pullback in the overall group. So sentiment among investors may be shifting. Stay tuned. And if you haven't already, use that button below to trial my MEM Edge twice weekly report. I do, in fact, not only have a lengthy report on Sunday, a midweek update, but alerts if there is any significant shift in the markets or stocks on my suggested holdings list. From here, let's go ahead and take a look at a couple of energy names that are setting up really quite nicely. Now, the first one has already had quite an advance, but I'm going to share it with you so you can see the characteristics that really identified it as a buy point back here in February. This is Diamondback, FANG is the ticker symbol, and this particular gap up here in the middle part of February was all about the company's acquisition of an additional E&P name, and in turn, it has now put Diamondback as one of the top suppliers of oil in the Permian Basin. And investors viewed it as very good news for the company. Let's take a look at what happened on the news. And initially, we did get this gap up in response, and that gap up did have the stock experience a shorter term base breakout, super high volume indicating accumulation. From there, the stock advanced further to an even lengthier base breakout, multi-month, also taking place on high volume, indicating accumulation as the RSI continued to advance. The stock then entered into a brief period of consolidation. This is very normal, what you will see in companies that gap up either on news or on earnings, and the stock remains in a confirmed uptrend. So from here, we can go ahead and take a look at a couple of other stocks that are also in this energy space and are looking interesting. First up here is Marathon Petroleum, MPC, and a lot of these energy names have already begun their advances, but for me, I will want to see the stock exhibiting characteristics that are bullish, such as the momentum indicators, but also I want the stock to be above its key 10 and 21-day simple moving average. So what I'm highlighting for you here is the fact that MPC broke out of this flat base and into a very healthy uptrend, high volume on today's rally day. Now, when you see this stock, you may think that you missed the move, but historical precedents tell you that, in fact, back here in July, when for instance, MPC entered into a strong uptrend, we saw considerable upside despite an overbought condition with these momentum indicators. And also what I wanted to highlight for you when you're looking at these energy names, for those that are interested, I'm going to pull up a full quote, and from here you can examine the yield. MPC not particularly healthy at that 1.6% level, but some of these energy names will really come through with strong earnings. Let's take a look at another energy stock, PSX, and this is Phillips 66, and this particular company has a 2.3 or 2.6% yield with an annual dividend of 4.2, and as similar to other energy names that we've been looking at, it is just now experiencing a base breakout after a little bit of an uptrend here. Super nice volume characteristics on the nice base breakout here, and then on today's advance as well, pointing to further upside for PSX. That's it for this week. Everyone have a great week. I'll see you here next Friday.